G'day folks, welcome back to Pete's Investing. It's June 21st, 2024. And this is another update for the SP500 and relevant markets. You can see there the S&P and the NASDAQ have dropped slightly since our last update. The Nikkei, the Japanese Nikkei, has moved sideways and the GermanDax has risen slightly. Going to our heat map, we've got the CCI 150 trends, and you can see there the bottom left there, predominantly still bullish on the monthly trend on the CCI 150 for all markets. It's a bit of a mixed bag there for the US market, predominantly bullish on the weekly, but predominantly bearish on the European ones, and neutral across the board basically, and plus some other instruments for your reference should you wish to pursue those. In terms of trading that we use, we trade in the direction of the larger time frame. So if you're trading on the daily, for example, we trade in the direction of the weekly, or if you're trading on the intraday, for example, a 1 hour, 2 hour, etc., we trade in the direction of the daily trend. Our entry strategy is to enter when the CCI 150 breaks out as a fresh breakout from the moving averages, and I'll go through those in a couple of examples, but also that link to that video is attached in the description below should you wish to learn how to draw that indicator in your own charts. And to close a trade, we close it out when the CCI 150 moves back into that moving averages, or the moving back into the moving averages of the price chart. And again, I'll go through an example of those. So first, looking at the S&P 500. What we've got here is the monthly, the weekly, and the daily. And on the monthly, we're still bullish with our CCI 150 trending above the moving average range. And you can see there we do have a bearish divergence longer term between those highs on the CCI 150, lower highs, versus higher highs on the price. And that price is still rising since our last video. It's been relentless actually. And on the weekly, again, we do have a bearish divergence. Those highs, that's high there on the CCI 150 is slightly lower than that peak versus higher highs on the price, and that also is a bearish divergence. On the daily, however, we did have a bearish divergence back here. You can see there lower highs on the CCI 150 versus high highs in the price, and we always choose the closest Fibonacci range, and that would have been the 23-38% level. And again, for those new to the channel, we draw the Fibonacci range to the recent low before that point. You can see there the 23-38% is our minimum target. Of course, it can drop much further, but in this case, it bounced off that support at 49.26, and that's our minimum range. Now, we don't trade that necessarily. That's pretty much an area we look out for as a minimum retrace. It, of course, could go further to the downside in this case. Let me just remove that, make it a bit neater. Now, at the moment, there is no divergence. The CCI is moving in line with the price, making new highs. However, it's hit this. We did have a recent resistance at 54.48. I'm going to remove that and use this new resistance at 54.95. Now it's actually bouncing down from there, giving us a potential reversal or at least a retrace. Again, there's no divergence on the daily. Now if you go to the hourly chart, and I've got the daily here as a reference. Again, you can see there we take predominantly long trades during that period, and you can see here on the hourly chart we did have a bearish divergence here. On our last video, it dropped down to that recent peak on the CCI, lower high versus higher highs on the price. Now, since then, the CCI has continued to fall, and we're going to remove that Fibonacci, and we're going to reposition that target area, and I'll move that in a minute. But basically what we do is we're going to move that, make it a bit, just reposition those trends. You can see there lower highs on the CCI versus higher highs on the price. And what we do is we take it back to the recent Fibonacci range. So take it back to that significant low. And assuming it's actually going to fall to the downside from here on, we're going to have a minimum target range between a 23 and a 38% level. Now we could take it to that recent low, but I'm just going to move it out to a wider time frame to give us a bit more movement there, so that we expect it to drop further to the downside. Now, if we did move it to that, let me just move that to that recent low there. Let's move it to there. You can see there it's just touched that. It's actually broken through that 23%. It's already broken through that level. So depends where you draw these. There is a bit subjective sometimes. I like to draw it to the recent low before the divergence started. So that's already hit that little target area, but I'm going to leave that Fibonacci range in there to the wider time frame as a reference. Now, in terms of trading, let me just remove that, make it a bit easier to read. In terms of trading, again, we only take long trades during the larger time frame. So if you're trading on the hourly in this case, you take long trades when the CCI breaks above the moving averages, which it did there, but also the price breaks above its moving averages, which it did there. So that would have been a nice area to go long on that big green candle, and that coincided with this area back here. Now you'll notice here the CCI fell off, so you probably would have been very cautious. Notice that the price moved sideways. It was uncertain. Wait for it to break above on the hourly time frame, so you probably would have gone long there. Now you might have closed out with a small loss there, enter again there. In this case, you would have ridden that little range up until that point when it entered back into the moving average range of the price chart. And then notice there as well, it broke into the moving averages of the CCI 150. Avoided trading until you see it break out again. There's a false break there, then it broke out again there, gone long. And again, probably you may have closed it out there depending on how closely you watched it, or let it run. So again, maybe a close out there, but another entry would have been made at that point. Let it run, closed out a small gain, another entry there, let it run. This probably would have been about a break even. So again, notice the reason there's been a lot of small gains, or in fact break evens or losses during this period. Notice you've got a bearish divergence. So again, I don't trade the divergence, but I use it as an example of where to look for trades. Where there's no divergence like it was back here, for example, that would have been a nice area to go long during that period. There's no divergence to worry about. It's generally a bit of an easier ride to those target ranges. So again, when you see a divergence, that's why I use these divergences. Be cautious about going in the trend given, because that divergence means it may turn down at any time. Next, we look at the GermanDax. Now, the GermanDax has been bullish on the monthly as well. It's hit this area up here, it's hit a bit of a resistance. On the weekly, likewise, it's been bullish, but however, it's broken down into a bearish outlook on the CCI. But notice the CCI is flattening out. It's not as wide. I like to see it wider, like it was back here, to be more confident. So this is a potential. If it continues to the downside, we may see the CCI moving averages widen a bit more on the weekly. But notice as well, we did have a bearish divergence on this wider time frame. Now here, I'm going to draw another range. In this little smaller range, you'll notice higher highs on the price versus slightly lower highs on the CCI 150. That's a bearish divergence. So again, if we were to draw a Fibonacci retracement between that range on the weekly, you can see there it's already broken into that 23-38% level. So if we mark that area, that's a minimum retrace on the weekly. Just delete that. So that's the weekly. It's a bit of a bearish move at the moment, which worked out with this bearish divergence. On the daily chart, we did have a higher highs there. It's hit this resistance at 18,936 versus lower highs on the CCI. And again, that's fallen. Now, in terms of, that's pretty much the same area as what I just explained on the weekly. So if I was to draw a Fibonacci on that range there, that would have been before that significant low, before that divergence started. And you can see there, it would have been a range given between the 23 to the 38% level. Now, if we go to the hourly chart, again, using the daily as a reference, we only take short trades, and you would have started short trades from the 21st of May. Go back to the 21st of May, which corresponded with this area back here. Again, you would have only taken short trades in those little downturns and closed them out when they hit the moving averages. Another short trade there, but notice we had a bullish divergence here. Right, so you would have gone short. That would have been ideal to go short when it broke below the moving averages on the price chart, but also the corresponding moving averages of the CCI. You would have taken a short entry there, and that would have been a nice little trade to take, and you would have closed it out ideally in that range there when it went sideways and that entered the moving averages. Entered another short position there, and again, close it out when it enters the moving average range. Now notice here, as it continued, the price kept dropping, but the CCI started giving us higher lows, and that was a bullish divergence. So you would have been careful about going short here, even though that was giving you a bearish signal or a bearish entry potential on that candle. You would have noticed here that the CCI started giving you higher lows. So you would have most likely avoided trading short during this period. You would not have entered this period here going long because, again, remember, we're only trading in the direction of the daily time frame. So the Japanese Nikkei, that's been bullish for a number of months now. And you'll notice here it's still rising, although it's hit this resistance up here. That's on the monthly. On the weekly, we did have a longer term, we did have a bearish divergence. And I've drawn a target area for that, should that play out. And on the daily, we did have a bearish divergence here as well versus higher highs. And the price fell off, hit our target area, and it's been going sideways since. So it's currently trapped in this range between the minor resistance at 39,477 versus support at 36,707. And going to the hourly chart, again using the daily as a reference, notice here it's been very flat. So this is probably a caution. I'd like to see the moving averages of the CCI a bit wider like they were back here. So that would have been a safer place to go short on the based on the daily. But during this period, it's a bit of a stretch, seeing a very narrow moving average range, so probably avoid trading long or short. You can see here it's sticking its head above and below this moving average range. However, having said that, you'll notice here, for example, on the 1 hour chart, that was a nice little drop, and that would have been that little period back here on the daily, if you were quick enough to catch that. But again, some of these are a bit dicey, like how do you know that wasn't going to continue to drop, and you would have closed out with maybe a break even or a more small loss. And then some of these other ones back here, for example, that was another, actually that was rising. The other thing I'd like to look at as well is it needs to break below both the price and the moving average range. So that would have been an ideal spot based on the hourly alone to go short. And again, you would have closed it out during that period, entered again there, and closed it out again when it entered into the moving average range. So that would have been a nice little range to trade. And I've obviously avoid going long during that period. Some of these little areas would have been break evens. You can see there it's pretty much going sideways and pretty much not giving you much of a fall. So again, I'd like to see the moving averages here a bit wider to be able to take advantage of the 1 hour time frame trades. The NASDAQ, similar to the S&P, has been bullish for most of 2023 actually, and hitting new highs. So it's bullish on the monthly, bullish on the weekly. However, notice we do have a longer term, actually it's not, that would have been from back there, a divergence. But had we drawn it from there, that would have been an invalidated divergence. That's a bit of a tricky one to monitor. However, I have drawn a target area should it break to the downside on the weekly. On the daily, that was a bearish divergence back here versus the price chart. It fell off, hit our target area, and went as low as probably the 50% level and bounced off the support at 17,007. It's actually broken up higher through that next level of resistance and hitting this new resistance at 19,985. And potentially breaking to the downside. You can see there it's in a neutral zone on the daily, so avoid going long or short on the smaller time frame. So if we jump to the 1 hour chart, again, because the daily is in a neutral zone, avoid taking long or short trades. But during this period, for example, you would have taken long trades on the 1 hour time frame based on the daily. And if I take it out to this point here, that corresponded with the 5th of June, and the 5th of June started back here. You would have taken a long trade during that period, closed it out, started to enter another long trade, closed it out. Avoid going long during this period. That might have been a false break. Another entry there, and closed it out there, small little gain. Another entry there, closed it out there with a little gain. Avoid going long. Now, once you start seeing the CCI drop off, so seeing a bearish divergence versus the price, again, remember, as I said before, it's a bit of a tricky one here because you've got limited expansion or a limited upside potential. Even though this one seemed to have gone nicely, overall the overall trend is very weak. So again, avoid trading when you see a divergence happening. And you can see here it risen slightly, but then it started dropping off. But again, at the moment, I would avoid going long or short until we see this break above the moving averages of the daily or below the moving averages going short. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.